This is Jay Norris with Brewer FX. Today's Thursday, October 16th. Welcome to our video commentary. Before we get rolling, I do want to point out that futures trading and Forex trading is a risky endeavor and not necessarily suitable for all investors. The charts we're about to look at are current market snapshots and not necessarily indicative of future conditions. As usual, we start out with the euro. The lower right here, that's the 240-minute chart. I think you have a possible head and shoulder pattern here. On the other hand, if you get a close below 134 here, all bets are off. Interesting on the 4-hour chart here. Look at you've got the stochastic just peaking above the 25 level. That may be significant. Normally I'm not going to point out shorter term patterns like this, but it being Thursday heading into Friday, there's a strong possibility you could see a short covering rally in the currencies and the euro here also. So given that end of the week, people maybe longer term speculators may be willing to hit the cash register there, so we'll keep an eye on that. The next market, the British pound. British pound eyes left here on the daily chart. I want to point out this trend line and see how the market's held above it. You had dojis 3 days in a row. The market's showing indecision. The short-term trend is higher though. The market's holding above that trend line. The British pound really didn't. It looked like you had about a 50% retracement there or so. So that's that's interesting. That points to that points out to short covering rally also tomorrow. Lower right, the 4-hour chart. Similar situation. It looks almost though the short-term trend's higher here, and it looks like the intermediate trend, disputably higher. They're arguably higher. So let's keep an eye on the British pound there too for a short covering rally. And if I had my choice of taking a buy signal in the euro or the pound, I'd do it in the pound because the pound is stronger, and we all know to buy strength, right? Buy strength, sell weakness. The Australian dollar coming back too. On the daily chart here, the short-term trend is still lower, but look at it, it's poking above that resistance line. 4-hour chart. Look at the trend line there. If it looks like if you can get above 70 there, you may be able to pop the cork vis-a-vis short covering rally also. Let's keep an eye on that. Japanese yen. Yen, I think we said earlier in the week, may claw its way back to the old breakout. It actually did that, or it's trying to do that now. It didn't quite get back there. Looking here at the 4-hour chart, I see we have a higher low in place here. Short-term trend higher on this 4-hour chart. Another situation where the potential for a short covering rally going into the weekend, going into Friday. The Canadian dollar. Canadian was very strong earlier in the week. Lower right, the 4-hour chart here for the CAD, for dollar CAD. I should say dollar CAD was very strong. The Canadian itself was weak. I'm looking at the 4-hour chart. What do we see here? That's a double top, isn't it? We've got a double top right at the buck there at 120, even number. You get pretty good divergence here. Here's another case where you could see the speculators on both the long and short term come out of this market in a hurry, just based on the technicals here. And what do we have here on the 4-hour chart? Looks like the short-term trend is now is shifting lower. I have to wait for the close of this bar. So the Canadian softening up, nice double top there, dollar CAD, potential for a counter trend move ahead of the weekend. The Swissy. Let's take a look at the daily chart on the left here. You see you've got resistance here. The market really couldn't follow through when the other European currencies were breaking hard. Dollar Swiss couldn't sustain that rally. Market's hitting resistance here. I want to show you something here. Peel back to the monthly on the Swissy, and you can see perhaps why it was stalling. You've got a 3-year bear trend line still in place. We may be in for a finally see some kind of correction for this rally that kicked off in the summer for dollar Swissy. Before we talk about turning around too quickly, look lower right. You've got an ascending wedge on the 4-hour chart. Essentially, that's a bullish pattern. However, we wouldn't make a bet or we wouldn't place a trade until we got to close either above resistance or below support. Euro yen, this is my buddy here. I love this market, the way that baby whips around. It's pretty nice. Daily chart, look at that nice hammer. You got a double bottom here, man. Double bottoms, they're placed kind of close. They're placed kind of too close together. The better double bottoms tend to be a little bit wider than that. But you got a nice hammer in place nonetheless. 4-hour chart, lower right, there's your double bottom there. Look at that. Between the time I drew that line, it's poking its head above there. To me, that looks like it could be, just one man's opinion, but a lot of these markets look like they're set up for a short covering rally ahead of the weekend. Pound yen pretty strong. Pound yen, look at the daily chart, see how it didn't quite retrace as much as the euro yen. That's telling us the pound yen is stronger than the euro yen. So if you have buy signals, you may want to take them in the pound yen as opposed to the euro yen. Lower right 4-hour chart. Look at the pound yen, took out that intermediate term trend line, so we can now see the intermediate term trend is higher in the pound yen. So there's another one. Keep beating that dead horse, but it's true that a lot of these markets look like they're set up for counter trend moves ahead of the weekend. I also want to pull out the stock market chart here for you. Lower right, this is the E-mini S&P. The U.S. stock market is represented by the S&P 500. Double bottom on the 240. Nice divergence there coming in. So we'll see. This market's been really significant. I'm not a big one for correlations. I just take signals in my markets. But in this case, the U.S. stock market has been very influential. When it goes down, it's been very supportive for low-yield currencies. Low yield equates to less risk for investors. So that's why you're seeing the stock market getting hit so hard, but the dollar being stronger because the dollar is a low-yield currency now. So the U.S. stock market not looking too bad. Like everything else, could be set up for some kind of a short covering move ahead of the just ahead of the weekend. We're going to be doing this every day now, and we certainly appreciate you stopping by. If you want to see Jim's commentary on the fundamentals, go to brewerfx.com and check out the blog there. You can also go back and see our video commentaries, go back in the past and see how we look at this as far as everything's setting up. But we'll see you tomorrow, and have a good one.